How private equity works. Buying companies without you noticing. Most people think of investing as buying stocks on a public market. You click a button, own a small piece of a company, and watch the price move. Private equity works very differently. Instead of buying small pieces of public companies, it involves buying entire businesses, often quietly and behind the scenes. Companies can be restructured, expanded, or sold years later, sometimes at a significant profit. So today we are going to walk through how private equity actually works and what happens when firms invest in companies this way. Chapter 1: What private equity is. Private equity refers to investments made in companies that are not publicly traded. These companies are privately owned, meaning their shares are not available on stock exchanges. Private equity firms raise money from investors and use it to acquire or invest in these businesses. The goal is to increase the company's value over time and eventually sell it for a profit. Chapter 2: The investors behind the funds. Private equity firms do not usually invest their own money alone. They raise funds from investors such as pension funds, institutions, and high net worth individuals. These investors commit capital to the fund for a set period of time. The firm then manages and invests that capital on their behalf. Chapter 3: Acquiring companies. Once a fund is raised, the firm looks for companies to invest in. These companies may be underperforming, growing, or in need of restructuring. In many cases, private equity firms acquire a controlling stake or even the entire company. This gives them the ability to make strategic decisions. Chapter 4: Leveraged buyouts. A common strategy in private equity is the leveraged buyout. This involves using borrowed money to help finance the acquisition of a company. The company being acquired may even take on some of that debt. The idea is to use leverage to increase potential returns. However, it also introduces additional risk. Chapter 5: Improving the business. After acquiring a company, the firm focuses on increasing its value. This might involve improving operations, reducing costs, or expanding into new markets. Changes may also include restructuring management or refining business strategy. The goal is to make the company more efficient and profitable. Chapter 6: Holding period. Private equity investments are typically long-term. Firms may hold a company for several years. During this time, they work to improve performance and position the business for growth. This period allows changes to take effect and value to increase. Chapter 7: Exiting the investment. Eventually, the firm looks to exit the investment. This means selling the company or its stake in it. Common exit methods include selling to another company, selling to another private equity firm, or taking the company public. The goal is to sell at a higher value than the initial investment. Chapter 8: How firms make money. Private equity firms earn money in two main ways. First, they charge management fees for overseeing the fund. Second, they earn a share of the profits, often called carried interest. This means they benefit directly from successful investments. Chapter 9: Risks and considerations. Private equity involves both potential rewards and risks. The use of debt can increase returns but also adds financial pressure. Not all investments perform as expected. Because funds are typically locked in for several years, investors may not have immediate access to their capital. Understanding these factors is important when evaluating private equity. To wrap up, private equity works by raising funds from investors and using that capital to acquire or invest in private companies. Firms aim to improve these businesses over time and increase their value. After a holding period, the investment is sold, ideally at a profit. Strategies such as leveraged buyouts can amplify returns but also introduce risk. Although it operates largely behind the scenes, private equity plays a significant role in shaping many businesses and industries. This has been a mini Leviathan production. If you enjoyed it, check out our other videos. See you in the next one.